Hello friends, welcome. Friends, today I am going to talk about a very interesting topic. And the topic actually got triggered because of this article which I saw in the newspaper in the morning. And this article is talking about the finance minister responding in the Lok Sabha that RBI is not buying gold to replace dollar for settlement. Now, friends, why this issue has come up and why our honorable finance minister is forced to respond. You all know that because of the recent change in power in US, the new president is going around threatening the whole world that if anyone goes and starts with a separate currency for transaction, then he is going to come heavily on that country and impose tariffs. He has been threatening this country, and that's why this issue came up. And Congress MP Manish Tiwari raised this concern that if RBI, whether RBI is buying gold to replace dollar for settlement. Now, I found this very interesting because this whole buying spree of gold by central bank like RBI is going on for a long period of time. It's even much before the US presidential election got over and the new president came up in power, right? And even other central bankers also buying gold, right? Now, friends, what I want to do in this video, I want to explain to you using data as to why RBI is buying gold, what purpose it is going to achieve. That's the whole intent of this video, right? And since this is a very complex topic, in order to tell the story, I had taken the pain to aggregate data from various sources and put those in dashboard form in my website, and I will take you through chart by chart to make you understand what is going on. Okay, so without wasting further time, let's go into the video and we will understand first the concept, and then we will understand the behavior of RBI, whether it is abnormal, if there is a change in the RBI strategy, or this behavior has been persisting for a long period of time. That's all we are going to do. Now, in order to understand the concept, I will first take you through this chart, which is the foreign exchange reserve trend in dollar billion, which I have captured in my website, and it is an RBI data which I have aggregated. Now, if you look at this chart, you will find that there are multiple rows. The topmost one is foreign exchange reserve. Second is total foreign currency asset. Third is gold. Then we have SDR. Then we have reserve tranche in IMF. Now, the last two items are very negligible amount because all these four items that you see aggregate together to make up the total foreign exchange reserve. Now, the concept of foreign exchange reserve has to be understood. What does foreign exchange reserve mean? If we don't understand what foreign exchange reserve means, then we cannot move further in this video to understand why gold is getting purchased. First, let's understand what is foreign exchange reserve. So there are two important ingredients which make up the foreign exchange reserve. As I told you, the rest two are very minor, so we'll ignore them. One is foreign currency asset, another is gold. Now, foreign currency asset consists of dollar, pound, yen, and there may be other currencies. It is not just dollar. That is one thing we need to understand. Okay. Then, whatever you see here, right? If you look at this trend of foreign currency asset, it went up and then it went down. What does it mean? See, the change in foreign currency asset, what you see right in the table, is on account of two reasons. One is that foreign currency is getting depleted or increased because of accumulation or spent by RBI, right? Or because of any reason, because of change in our balance of payment sheet, because India keeps on doing transactions, and because of that we accumulate and we deplete foreign exchange reserve, and some of the foreign exchange reserve get depleted intentionally to maintain rupee stable and remove volatility of the rupee. But whatever is being captured here is nothing but valuation. This is the valuation number of foreign exchange asset number. This is not the actual cash flow. This is very important to understand. These are valuation number, right? Now, what does valuation mean? Let's talk about that. So for that, we have to understand the following. First, as I told you first, that it consists of multiple currencies. So each and every currency has to be valued in US dollars. Let's say a pound. The pound value will keep on fluctuating with US dollar. Therefore, for every moment, every month, there will be a separate value of pound currencies with respect to, let's say, US dollar. So that needs to be aggregated and put as a part of the valuation. The second is that all these numbers that you see here, it is not relying as, a dollar value with RBI's coffer. It is being invested in US treasuries. Now, when you are making investment in US treasuries, value of those investment will keep on fluctuating with time, depending upon the yield change, market yield changes of those bonds. Now, you have seen, I showed you in one of my charts, which I have created and put in my website, that the bond of various duration, which are being listed in US, has different yield numbers which have been changing drastically with time, right? If you see that the 10-year bond rates, right, have been very low initially in the month of March, April, which are all green. Now it has changed significantly, which means that as the bond yields increase, value of those bond assets are going to decrease, and that is going to get reflected here. Can you see this? This is where the reflection will happen, because these are not all lying here. These are invested in various parts of the world, in a large portion in US treasuries, right? So because of that, the valuation will change. So therefore, this asset that you see here is a volatile asset. Means the volatility is going to be impacted by not only the cash accumulation, but the change in valuation. Now, if there are no counterbalance, which is there in the overall asset class that we maintain in foreign exchange reserve, then what happens is that this is going to become highly volatile. And therefore, in order to maintain a balance, you need to have an asset class which diverges from the point of view of the other asset class which is present in your balance, in your books. So this is having a different direction of movement compared to gold, which has got a totally different direction of movement. So if you see that the foreign exchange part of the asset since September has been going down, depleting, whereas gold is rising. Now you may say this is because RBI is accumulating gold. No, it is not because the RBI is just accumulating gold, the value of this gold asset is increasing. It is because of the fact that the price of gold has increased significantly over this period of time. So I'm going to show you the spot prices of gold. Right, and if you look at, let me just take you from September onwards. So I'll change this to 6, and if I change this to 6, it's come to September. So from September onwards, if you see in this chart, you will notice that the value of gold on a per ounce basis has significantly shot up from 905.51 to 991.5, which means that whatever gold that we are holding in our balance sheet, their value has also increased. So this is completely, you can say, northwise versus the US bonds values, which are depleting on account of the interest, the yields of these bonds increasing. So there are two asset class which are completely divergent in nature. Because of that, you are able to contain some volatility, and therefore every country has got certain amount of mix of gold asset in their foreign exchange reserve in order to mitigate that risk of volatility on account of the investment which they do in various parts of the world, which are highly dependent upon the yield rate of bonds in the various countries. And somehow the gold prices have been shown going good in a divergent direction, and therefore the volatility of those asset class can be contained. So that's the foundation, right? Now, how do you accumulate foreign exchange as foreign asset? You do so by looking at the balance sheet. So looking at the balance of payment table. Now, in the balance of payment, you will see that there is a line item called monetary movement, where this line item has been adjusted such that the overall BOP table adds up to 0. So whatever number that you see here, which is negative, means it is a positive accumulation in the foreign exchange reserve sheet. So this number is going to be positively impacted if the BOP table actually shows a negative number. So there is a transaction which is happening from India and outside between India. So that transaction leads to accumulation and depletion of foreign exchange. So if this is positive, then the foreign exchange has been depleted. If it is negative, then the foreign exchange has been added to the overall foreign exchange reserve. Now this number in absolute term does not add up to the foreign currency asset, because the valuation part which I mentioned, which you can clearly see if you go to the Reserve Bank half yearly report on foreign exchange reserve, which they have released in October 2024, where the valuation part has been clearly captured here. You can see this Roman 3. This is where the valuation part has been clearly captured, because this is the same, BOP statement, current account, capital account, everything is there. And when you add the valuation change, then only you will get the total increase and decrease of foreign exchange. Whereas in the normal BOP statement, this valuation part is not taken into consideration. So that's the second concept which I wanted to explain to you. Then let's go to the World Gold Council data as per as central banks buy and sell of gold in metric ton. So what I will do is, if you look at this chart, let me just give you a little bit of a peek or overview how this chart looks. This chart has got different countries listed here. Then we have got their total holdings and which date the holding was there. And this is the incremental changes in gold over this window period. Right, this total window period. So if I do a sort by the row sum, which is the total buy of gold, you will notice that from January 2024 to December 2024, Poland is the country which actually bought 89.5 million ton of gold, followed by Turkey and then India. China actually falls much below with 42.2 million tons of gold in a monthly time scale from January till December. Right. Now, if I choose a quarterly time scale, that will zoom out and will give you a better picture. So you will see that in a quarterly time scale from FY22 to F4 to FY 2025 Q3, China bought 31.3 million tons of gold. Turkey actually has bought 220.8 million tons of gold. Poland has bought 217.4 million tons of gold. India has bought 122.1 million tons of gold. Now the question comes here, why people are buying different tranches of gold and why India is so low in the table, right? I'll show you the yearly time scale also, which will give you a sense that Russia has bought 1.3 billion tons of gold, China 1.2 billion tons, Turkey 489.9 million tons, Poland 344, and India is at 313. So which you will notice that India's buying spree of gold started from FY19, not before that, right? Before that, you will see that since FY14, there was no significant gold that India has bought. Now, this also does not tell the story. For that, we have to go to a different chart. And this chart will give you a better picture as to what is going on. So, let me just first remove this and make it 0. So, this chart is actually tells you, this is a very important chart by the way. This gives you a flavor of 4 different dimensions on a country specific and a heat map down below, where all the countries are ranked on one single dimension. Let me tell you what dimensions we are talking about. We are talking about total reserve. We are talking about foreign exchange reserve in US billion. Then we are talking about gold ton. Then we are talking about gold in US dollar billion. Then we are talking about gold as a percentage of total reserve. Now this is very, very important. Gold as a percentage of total reserve. Because if you look at this number is going to tell you certain story, and which I am going to show you by taking a yearly time scale. Right? Let's look at the yearly time scale. This I have selected India, and this is basically all the other countries, and we are going to talk about this later. So let's look at what India is experiencing. If you notice that in FY11, India's percentage gold reserve, right, of the total foreign exchange reserve was 8.4%, and it rose to 10%, then 9.6%, and then it started to fall. So let me just zoom in a little bit so that you get a better picture as to what is going on. So if you see here that FY11, it was 8.4% of the total reserve, 10%, 9.6, then it started falling 7.5, 6.2, 6.1, 6.6, 5.6, and then it started to shoot up. Now, it is important to understand the FY20. FY20, from FY20 onwards, what happened was the bond market became very volatile in US because of COVID, because of huge amount of liquidity which was basically thrust into the US market. That created a lot of inflation, that pushed the expected inflation and the bond market, and India started buying gold from that point onwards. So it is not an event which is uncorrelated with any external event. So it is just after COVID. Before that, the gold price, our gold of the total foreign exchange reserve was maintained at around 6% onwards, because we didn't face that risk, because the US investment was quite stable. Because the bond, if you look at this chart, this chart which I showed you, you see that it was quite stable. These numbers were quite stable. There was not a huge increase in yield. If these yields are, let me just take a different time scale. You'll get a better picture. If I take a yearly time scale, just a minute, you will be able to get a better picture what is going on. So I'll take yearly time scale. Let me just take a yearly time scale. So yearly time scale, you will see that, look at this, all green down below. This is all after FY21-20, these started rising. You see, all the bond yields started rising, and that correlates with what we saw right now here. Where is it? This is where. So you'll see that from FY20 onwards, Indian Central Bank started buying gold because of that factor which I mentioned, just to mitigate the risk, just to have an asset class which actually is a completely opposite. It goes in the opposite direction versus the investment which the India has done in US treasuries, which is going in a southward direction because of rising yield. So that's why we are in buying spree as far as gold. Various countries will buy gold because of various other reasons. But we are doing so because of, you can clearly see, this has been, because it was falling flat, right? And then it suddenly has started rising, right? Now, if you go back in time, let's say by another 10 years, and you will see what is going on back in time, you will see that again the same trend. You will see that the reserves were maintained. So let me just take my pen here. The reserves were 6.9, 6.3, and it went down. Again it went up, and then it again went down, and then again it is going up. So the intent is to keep a certain percentage of gold as reserve in our portfolio, depending upon how volatile which we see our other investment. That's the whole intent. We have 11.4% in gold as gold of the total reserve because of the fact that first, our reserve actually has dropped because of the huge amount of foreign exchange that we have to spend in order to maintain or curtail rupee volatility, and therefore this number actually has shot up because of that factor. It should have been ideally 10% in the normal times, right? Because of this period starting from September onwards, we have seen huge amount of outflow as foreign exchange because of to curtail volatility of rupee. So this is the storyline, friends. This is exactly what the story which I wanted to tell you, that it is not something unnatural which is going on. Every country will have a different. Russia was buying gold because it was trying to prepare itself for the war, right? Because it doesn't have any confidence in the US currency. So that's in short. I think already 19 minutes have passed, and I don't want to go further in this video. I hope that you have got a very good picture. You can get access to all this chart, and you can basically have your own insight as to, and own analysis as to what the situation is. I am not an expert, but because I look at these data, the data will tell you the whole story. That's all I try to do. I triangulate these data from different direction and sit on it for a long period of time, keep analyzing, then the story unlock by itself. So you can do the same, and only way to understand these complex subject is to do hands-on data analysis. If you do that, you will be able to unlock various insights Because just standalone numbers will not tell you anything, right? If you just pick up a number and just throw the number on the table, it doesn't tell the story. You have to look at the trend, and you look at you have to triangulate these data sets from different angles and analyze it, and then only you will be able to get the full story. So thank you friends for your time. I'll come back with a new video next time. Thank you.